Good afternoon. Welcome to Kenya News Update today. In a world where tech giants often face scrutiny over slowing growth and market saturation, one company has just delivered a performance that has Wall Street analysts scrambling to update their models. Apple, the Cupertino-based behemoth, has reported fiscal first quarter earnings that not only smashed expectations, but have set a remarkably optimistic tone for the year ahead. The headline: a staggering 16% surge in revenue, driven by what CEO Tim Cook himself described as simply staggering demand for the latest iPhone lineup. But beneath this headline of triumph, there are complex currents: soaring component costs, strategic AI partnerships, and a critical rebound in a key market. Today, we dive deep into Apple's blockbuster quarter, unpacking the numbers, the narratives, and the nuanced challenges that lie ahead for the world's most valuable company. We'll examine the undeniable success, debate the sustainability of this momentum, and ask what this means for the global tech landscape in 2026. Let's begin with the raw numbers, because they are, in a word, monumental. For the critical holiday quarter ending in December, Apple reported revenue of $143.76 billion. That's a jump from $138.48 billion in the same period last year, marking that 16% annual increase. The star of the show, as always, was the iPhone. Sales for the iconic device soared to a new quarterly record of $85.27 billion, up from $78.65 billion. This performance decisively beat Wall Street's expectations, which were already high. On a per-share basis, earnings came in at $2.84, surpassing the anticipated $2.67. The market's immediate reaction was positive, with shares climbing more than 1% in after-hours trading. This isn't just a good quarter, it's a historic one, demonstrating the enduring power of Apple's brand and product cycle, particularly with the launch of the iPhone 17 models. So, what's driving this staggering demand? According to CEO Tim Cook, who spoke with Reuters, the hunger for the latest iPhone 17 lineup has been exceptional. The devices have been well received globally, praised for significant upgrades to camera systems and overall performance. But perhaps the most crucial piece of this success story is a market rebound many had written off: China. After periods of concern about slowing sales and geopolitical tensions affecting consumer sentiment, Apple's business in Greater China has bounced back sharply. This resurgence in one of the world's largest smartphone markets has been a key pillar supporting the overall revenue surge. It suggests that Apple's premium positioning and ecosystem loyalty remain potent forces, even in fiercely competitive environments. The narrative of a plateau in hardware sales, a concern that has dogged Apple for years, has been forcefully challenged by these results. However, the story doesn't end with the holiday quarter. Perhaps even more telling was Apple's guidance for the current period, which runs from January through March. Finance chief Kevin Perk provided a forecast that sent another wave of optimism through the investment community. Apple expects March quarter revenue to rise between 13 and 16% on an annual basis. Translated into dollars, that's a projected range between $107.8 billion and $110.66 billion. Why is this so significant? Because it handily exceeds the consensus estimate from analysts polled by LSEG, who were expecting around $104.84 billion. This forward-looking confidence indicates that Apple's management sees the strong demand persisting beyond the holiday gift-giving season, pointing to a sustained upgrade cycle and robust consumer spending on technology. But now, let's introduce the counterpoint, the cloud on this otherwise sunny horizon. While revenue projections are soaring, there is a significant pressure point emerging on the other side of the ledger: costs. During the same conference call that delivered the upbeat forecast, Apple issued a warning. The company cautioned that rising component costs, particularly for memory, are threatening to squeeze profit margins. This is a critical nuance. A company can report record sales, but if the cost of producing its goods rises faster, the bottom-line profit can suffer. This tension sets up a fascinating debate for investors and analysts. On one side, you have phenomenal demand allowing for strong pricing power. On the other, you have inflationary pressures in the supply chain that could eat into those gains. Apple's ability to navigate this squeeze, through supply chain management, potential future price adjustments, or design efficiencies, will be a key story to watch throughout 2026. This leads us to another layer of the Apple narrative: artificial intelligence. It's impossible to discuss Apple in 2026 without addressing AI. The company made headlines in 2024 with a promise to profoundly upgrade its Siri digital assistant using generative AI. Yet, as noted in some reports, the company has faced what have been described as AI blunders and delays in delivering on that full vision. Interestingly, this quarter's success came despite those unfulfilled promises. It highlights the current duality of Apple's position. Its traditional hardware business is firing on all cylinders, while its future-facing AI strategy is still a work in progress. In fact, to accelerate its AI capabilities, Apple has sought a helping hand from Google, forging a strategic partnership. This move underscores the competitive pressure in the AI race and raises questions about whether Apple can maintain its walled garden approach or will increasingly rely on external alliances to keep pace. Let's visualize the core of this earnings story to fully grasp the scale of the achievement. The holiday quarter revenue tells a powerful tale of growth against a high baseline. Beyond the iPhone, other segments of Apple's business also showed strength, contributing to the diversified success. The services division, which includes the App Store, Apple Music, iCloud, and Apple Pay, remains a high-margin engine. Revenue here was reported at $8.95 billion, up from $8.13 billion in the year-ago quarter. The wearables, home, and accessories segment, which includes the Apple Watch and AirPods, brought in $8.60 billion compared to $8.39 billion. While the iPhone is the undisputed heavyweight, these segments demonstrate the power of the ecosystem. They create recurring revenue streams and deepen customer loyalty, making the Apple universe harder to leave. This ecosystem effect is a fundamental part of the investment thesis for Apple, as it provides stability even when hardware upgrade cycles might theoretically slow. Returning to the debate around sustainability, we must consider the macroeconomic environment. The global economy in early 2026 presents a mixed picture. Consumer spending has shown resilience in some sectors, but concerns about inflation and interest rates persist. Apple's bullish forecast, especially its projection of up to 16% growth for the March quarter, is a bold bet on continued consumer strength. It suggests that management sees its customer base as relatively insulated from economic downturns, willing to prioritize spending on premium technology. This confidence is noteworthy, but it also sets a high bar. If economic conditions were to deteriorate more sharply than anticipated, Apple could find itself exposed, particularly given the warning about its own rising costs. The company is navigating a narrow path between premium pricing and broader affordability. Furthermore, the supply chain warning is not to be taken lightly. Apple specifically mentioned it expects constrained iPhone supply during the March quarter. This constraint could be a double-edged sword. On one hand, scarcity can maintain an aura of exclusivity and support high prices. On the other, it could mean leaving money on the table if demand outstrips what the company can physically produce. The root cause, rising memory costs and broader component inflation, is a global issue affecting the entire electronics industry. How Apple manages this challenge, compared to its competitors, will be a test of its legendary supply chain prowess forged under Tim Cook's leadership long before his presidency. Now, let's place this moment in a broader context. Apple's performance is being closely watched not just as a corporate earnings story, but as a bellwether for the global tech sector and consumer sentiment. A strong Apple suggests confidence in high-end discretionary spending. It also reinforces the idea that in an age of AI hype, revolutionary hardware with tangible improvements, like better cameras, still commands massive consumer interest. The success in China is particularly symbolic, indicating that global business bridges, while strained, remain fundamentally operational. It's a data point that policymakers and business leaders from Nairobi to New York will be analyzing. In conclusion, Apple's first fiscal quarter of 2026 delivers a clear and powerful message. The iPhone and the Apple ecosystem it anchors remain a cultural and economic force of staggering magnitude. The 16% revenue surge and the confident forecast for further growth are testaments to product execution, brand loyalty, and a successful rebound in critical markets. Yet, the full picture requires acknowledging the headwinds. Soaring memory costs present a direct threat to profitability, and the company's own AI roadmap remains a promised land not yet fully reached. The debate, therefore, is not about the success of the past quarter, which is unequivocal, but about the trajectory of the coming year. Can Apple manage the cost squeeze without compromising its premium appeal? Will the AI partnership with Google bear fruit quickly enough to meet rising consumer expectations? The company has given investors and the world a quarter to celebrate, but it has also set the stage for a high-stakes balancing act in the months ahead. For Kenya News Update today, this is a reminder of the interconnectedness of our global economy, where a product launch in California can ripple through supply chains and investment portfolios worldwide. Subscribe to Kenya News Update today for more deep dive analysis on the stories shaping our world.